20 pips per day is all you need to be a successful trader. This trade of just 19.3 pips banked me over $7,000. It makes no difference to me if I'm going for a smaller profit target or a bigger profit target. All that matters is that I win the trade. And when you're targeting just 20 pips a day, it's really easy to be in and out of the market quick, so you don't have to stare at the charts all day until you need eye drops. My goal today is to teach you how to place one trade, win 20 pips, and be done for the day. The best way to do that is by scalping with supply and demand on the 15-minute time frame. We're buying from demand, we're selling from supply, and we're getting you high probability trades that will grow your trading account. So smash the like button, subscribe to the channel, and let's make some money. Here we are in my fully verified live MyFXBook account. You can see I gained $15,000 on a $100,000 account, all with some 20 pip trades. And if I scroll all the way down and click history here, you can look at those live trades and see we have a trade here for $3,500, $3,900, and over $7,000. And I'm going to show you all of those live trades later in the video. But first, let's jump into my back test here. I looked at 60 trades over the last couple of weeks using my 15-minute supply and demand trading strategy and came out with an 83% win rate, a P&L of over 1,600%. So you can see the strategy is very, very powerful. Now I'm going to teach it to you, and then I'm going to show you the live trades so you can start placing one trade a day, making 20 pips, and making some real money. Let's start the lesson with a perfect setup for a sell trade. First, set your time frame to 15 minutes and then come to indicators and just select the EMA. We're just going to put the moving average at 200 here, and if the price is below, we're looking for sells. Now, if we play the chart out right here, you can see we get a huge impulsive move down. We have about 6 or 7 red candles in a row. I only need 4 in a row in order to create my supply. To draw out my supply, I'll put it on the big green candle before the huge push down, just like this, and then I'll generally drag it along. The next thing I need to see is a break of structure, which we get right here. Then I'm just waiting for the price to come back to my supply. That's where I can enter my trade. The next positive aspect I'm looking at here is the price momentum slowing down. Now that we had the price re-enter the supply on this green candle here, I'd be looking to enter my position. My take profit, I would be dragging it all the way down here to this recent price level right here. And for my stop loss, I would be putting this above the supply or above a recent wick like this here. This would give me a risk reward ratio of about 1 to 3. And if we play this trade out, you can see it goes in my direction, smashes my take profit right here. The only one other thing I forgot to mention is I also want to set up my support and resistance. So you can see we have resistance at this level right here, and that's just an additional confluence, and it gives us a little extra safety in case the price comes up here. It will likely be resisted and pushed down and continue to respect the supply. All right, so let's go into the next example here. I'll just put my EMA on my chart again right here. You can see here we're in a significant uptrend. The EMA is all the way off of the price here, and so I'm just looking at the price. I'm looking for a demand. I'm looking to buy here, right? We're above the blue line. I'm looking to buy. So let's just play this out a little bit right here, and you can see we had a huge push out of this area right here. We have 4 or 5 green candles in a row. This is a very good sign, and we have our break of structure right here. And one thing I forgot to mention in the supply example is we want to have fair value gaps. So we have one fair value gap here, another fair value gap right here. This just means that the zone is going to be stronger when you get unmitigated candles. What that means is you could see this candle right here and this candle right here don't come up to mitigate this price, creating that fair value gap. That's all, just another confluence. So obviously at this level right here is the red candle before the big push up. So this is my demand zone. I'll just pull that across. The next thing I'm doing is I'm waiting for the price to come down. Now, this one is a little bit crazier here. Let me back it up, right? So we're getting wicks, which is okay. That's still safe. But on this one, I would be placing my long position around this level right here. And I'd be targeting the area right here, you know, the previous price. And for my stop loss, you can have it below the zone right here, below that wick. You could have it below right here. I'm going to have it at this level on this case. and you can see if I play this out, this trade would have went in my direction. Now, the last example was a little bit better because we had the price slow down a little bit more. You can see the price is going a bit fast here, but seeing these wicks are a good sign. That means the price isn't coming down and closing outside of the demand. It means the price is respecting the demand, so that's a good sign. Now, those are two ideal setups. Now I'm going to take it to the live charts and show you the 2 live trades I had this week, banking 20 or more pips and making thousands of dollars. So let's get into my first live trade example. This was a short trade I placed and it went very, very well. No spoiler. So you can see here prices below the 200 period moving average. I'm on the 15-minute time frame. Let's play a little bit right here. You can see we get the huge push down right here off of that green candle. So that right there is my supply zone. I also have an orange line set up right here. That is my resistance. You can see price was using this as support. Now price is using this area as resistance. Next thing you know I'm looking for is my break of structure, which we have right here. Then I'm looking for my fair value gap. We have a fair value gap right here. We have another smaller fair value gap right here. This is telling us that this is a really good demand setup. Let's continue to play this one out right here. You can see here we didn't get the slow of momentum, but price is already starting to respect the supply zone. So I'm not entering the trade at this level right here. This is where I decided to enter the trade because we're starting to get a little bit of slower momentum in this area right here. I didn't like it when these 2 candles right here just smashed into it full speed because I was worried that it would just come out. If I started my trade, it would just pop right out the top and knock me out for a loss. So let's go ahead and play that trade out, and you could see here it came down and smashed both my take profits. Because this was such a good setup, I actually opened 2 trades. The first trade exited at this level right here. The second trade exited right here, and my take profit was set at this level right here, targeting previous price action. My stop loss right here, above this level, above the resistance, above the supply zone. So this live trade followed all my rules. You could see here, $4,000 on the first position, $7,600 on the second position, 10 pips, 20 pips, a solid move. Okay, so this next trade here is not perfect. I've got to be honest, right? If we go to indicators right here and we put the moving average exponential, you can see the price is below the moving average right here. So I should be looking for sells. It means we're in a downtrend, and you should be trading this strategy with the trend, but I didn't do that this time, and I'm going to explain why. So let's just play this out a little bit right here. You can see that we do get a huge push out of this area right here. We have 3 in a row. They're really big candles right here. We do have this red one right here, but I'm okay because all of these green ones are very, very strong, and we know they're strong because all of these candles created fair value gaps, telling me this was a very, very strong setup, which means I'm setting up my demand zone on this level right here, the red candle before the big push up. So I'm just pulling this all the way along right here. That's my demand, and then I'm just waiting for price to come back to that demand. Obviously here we also have our break of structure at this level right here. So it is following the majority of the rules. Let's just go ahead and start playing this one out and see exactly what happens, and I'll explain why I did what I did on this trade. So you can see here the price entered my demand zone at this level right here. We actually had a little bit better slow in momentum here as well, a bit better than the last position. Now what you'll see I did on this trade is I went for the 20 pips, right? I'm always going for that 20 pips. My main focus is previous price action. You can see we recently reached this price right here, so I felt like off of this level right here, this would be a good price to target. Now in the other example, you'll see I would have targeted much higher, right? I would have targeted something like this, but because we were counter trend trading, I decided to just target this level right here, right? If the moving average is where I wanted it and the moving averages was down here, that means we were in an uptrend and I would have targeted more, but this was what I targeted. You could see here, let's play it out. We smashed the take profit at this level right here, but then you can see if I play this out, the price does start to push down. We were still in a downtrend, so I just caught a little bit of a pullback move here. That's not what I recommend for everyone, but when you're live trading, you don't always get exactly what you want. So I had a position here, I felt good about it, and I was able to get my 20 pips, and that was a really good trade. You know, it actually was 26 pips, it was $3,500, and it only took an hour and a half. graph. I just caught the pullback, won the trade, and I was out. Now, if you're looking for a place to trade, I recommend you sign up with Fintora. This is where I'm doing all of my trading right now. The spreads are low, the commissions are low, and I'm winning more trades. So register with Fintora today. Link is in the description. Now let's wrap this thing up. So today I showed you 2 ideal entries, and then I showed you 2 live trades. The 2 live trades weren't perfect. One of them was, but when you're live trading, things don't always go perfect. Now, I hope this supply and demand trading strategy helps you place 1 trade a day, get your 20 pip, and out of the market with some winnings. If you have anything you want to add to the video, leave a comment right now, smash the like button, subscribe to the channel, consider joining my VIP trading room or the free trading room. We've won 5 trades in a row in the free trading room, or just watch another video. Maybe watch this one right here. Definitely watch this one right here. I'll be back next week to make some more money. Much love.